and welcome to the Elevate podcast series. Today we've got two wonderful guests with us and we will be discussing why good data matters more than ever. Today we're welcoming Kim Lugtenaar, and she is Product Innovation Manager at Saffron Building Society, and we have our very own Nick Wakeham, Head of Data Sales here at 27tec.
Afternoon.
Welcome both.
Hi.
Thank you.
So we'll start off with kind of a generalised question. So Nick, for anyone who hasn't come across Insight or hasn't heard about it before, can you tell us a little bit about it and why it's become such an important tool for lenders?
Yeah, of course. So we offer a set of data analytics solutions under the umbrella of Insight brand, which is underpinned by our rich sourcing data. So we've got a front end report building tool, and we've also allowed lenders to ingest raw data as well. So we match their workflow of how they like to consume data. What Insight does essentially is it's using that sourcing data to enable lenders to analyze mortgage market, understand broker behavior, how their mortgages are being sourced, and how pricing decisions can be made.
Fantastic. So from rate changes and shifting buyer behaviour, like you mentioned, Nick, why is it important for lenders today to have that kind of information at their fingertips?
Well, as we've seen over the early part of this year, and also in previous years as well, the market can change very, very quickly. So from global incidents to changing political sentiment, our market is vulnerable to macroeconomic environments. So what we're able to do is, with the high frequency of data refreshing, we're enabling lenders to be able to protect themselves against that volatility, so that they're basing their decisions on this morning's data or yesterday's data rather than last month's or last quarter's. So essentially enabling them to adapt and pivot pricing strategy much, much quicker to keep up with the rate of change.
I think it's also really important to be able to see evolving customer needs. So to just what customers were looking for last year is not necessarily what they need from a mortgage nowadays. So from a product development point of view, it's really important to be able to see in detail and in a timely manner what's happening in the market.
Okay, perfect. So Kim, I'd love to bring you in a bit more here. You've experienced this firsthand, as you say. Before using Insight, what challenges were you facing and how were you trying to understand what was happening in the market before using this?
Yeah. So thinking about product development and seeing what the customer needs are out there that as a specialist lender we're trying to cater for, finding kind of detailed data beyond kind of the split between house purchase and remortgage or interest only and capital repayment. That's data that's really readily available. It's when we want to drill down to the kind of deeper characteristics of mortgage types that borrowers need, that the data becomes really fragmented. So actually there wasn't really a one stop solution. So this would then mean going out to find the data wherever we could. So that would be obviously getting it from some sourcing systems. You can get the high level data and then overlaying data that we could find in some case studies, research papers, or from different sourcing systems, but they would not be baseline. So we would then have to go baseline that data, overlay assumptions. And it, just wasn't a very good, it was very, very resource intensive. And at best, it will be able to it will allow you to say, this is what I think is happening. This is what I think customers need. But sometimes these papers or studies, they could be, depending on what it is, they could be out of date, they could be 2 years out of date. So actually, like I just said, having up-to-date insight into what a customer is looking for right now is really important, because as you've just said, the world changes really quickly at the moment. And whatever customers might have been looking for 2 years ago, they might still be needing, but it might also be that actually that's not really relevant anymore.
And that brings us nicely on to the next question, because you've just mentioned it as well. One thing that really stood out from your case study with us, and also that you've just mentioned, is turning from I think to I know. How important has that been day to day in how you use the system and how you work with it?
Yeah. So like I just said, using a lot of baselining, different sources, overlaying assumptions, it's very, very rare that you will get it absolutely right. So the best we could ever say is that this is our best guess. It's an educated guess, but it remains a guess. Having access to insights really allows us to go and see it's all the same source. We don't need to do that baselining anymore. Sure, sometimes we have to make a few assumptions, but in general, most of the specific data that we look for, we can actually get. So it removes that whole, well, we have assumed these, and therefore we think that's what customers need. That's what customers are looking for. We've removed that whole layer. And we can say with confidence, actually, this is what's happening in the market. This is what was happening yesterday. This is what was happening last week. Or even we can go back down to this is an evolving trend or seasonalities. So there's, there's so much data in there that gives us so much more confidence that we can actually say we know, rather than we had to make best assumptions.
And can you start to notice patterns from that as well, emerging?
I think, do you mean from the way we work?
Yes.
Yeah.
So can you, like you say about seasons and different things, can you start to see patterns that make you more confident in saying, okay, well, we saw this before and now we're seeing it again?
Yeah, absolutely. I think like you just mentioned, the market, when big things happen, it's certainly something that we can go, okay, we've actually seen that before. So we know better what to expect, because we can go back to when other big events have happened previously, to see actually is that what can we expect to happen, but also just general seasonality of when are people more likely to look for specific mortgage product types. So it's certainly something that gives us a lot more insight than we used to have access to.
Amazing. Awesome. So Nick, we hear people talking about, and we talk about it a lot, is making data-driven decisions. What do we mean by that? What does that mean for the market, and what does that actually look like in practice? Could you kind of break it down for us?
So other than being a tongue twister, data-driven decision making from a lender perspective, and Kim would obviously be able to give us some insight into this as well. So it's taking multiple data sets and combining those data sets to be able to confidently turn an I think into an I know. So rather than relying on experience or intuition or some potentially outdated policies, you're looking through that data to make sure that you've got the best assessment of a particular situation. So crude example, rather than offering the same interest rates to everyone with a similar credit worthiness or characteristics, lenders are increasingly looking at analytics to optimize that pricing strategy. So, from competitor rates to funding costs to customer behaviour, propensity to accept an offer, all of those things are going towards helping a lender understand whether or not to change an interest rate by 10 bips. And will that increase acceptance by 20%?
Wow.
So it's those kinds of decisions that the data approach is helping lenders make, and that obviously all leads towards profitability and maintaining margins. So that's why it's so crucial.
So these might seem like tiny, tiny little movements to everybody else, but in fact, they make a massive difference to the people being offered these mortgages, the people offering these, and the people in between.
Yeah. So there's so Kim mentioned customer outcomes earlier on. So ultimately, that's what lenders are driving towards, is better customer outcomes. Obviously, there's profitability and visibility of margins on the way to that. But things like LTV, are these types of customers more likely to go into arrears? So that's helping the risk teams understand, okay, well, where do we sit in with what our current proposition is? And then, even customer retention. So we talked about seasonality. So when is a good time to contact these types of customers, or customers who are in a particular journey with their mortgage, and what's the message that we're taking out to them? So all of these things can be improved and enhanced just by looking into the data.
Yep.
Perfect. So Kim, you mentioned that your team used to take days to do certain things, and using the insight system, that's become a lot faster. How has this impacted how your team works? How have you changed the way that you work?
Yeah, I mean, like I said earlier, looking for studies, papers that have been published on specific subjects, it takes a long time to work through all of that, to find it in the first place, to then work through what does that actually mean. I mean, depending on what we were actually looking for, that could quite easily take a week, especially when we were looking for multiple layers and multiple criteria points or customer characteristics and what they were needing. That could easily take days, a week, to prepare that to a standard where we were comfortable with it and confident that that was the best guess we could make. Whereas now it's a question of actually finding the right filters, getting comfortable that we've set it up right, but we don't have to sift through a 30-page report anymore. Actually, it's there, and we can export the data, we can use it, we can manipulate it. It's really straightforward. So actually, depending obviously on how big the piece of analysis is that we're doing, it might take half a day just to make sure we get all the bits that we want. But it's equally sometimes bits of information that we get asked for in, say, a meeting to support a recommendation is something we would usually have had to take away and say, we will have to look into that and we'll confirm later. Whereas now we can just circle back at the end, and by that time we would have had a chance to log into the system, find out, give them the answer, and make a decision. Wow. So it doesn't take another day or half a day to find the answer. It's right there. And
that's ideal. Yeah, that's amazing. That makes such a difference as well, even with that short space of time to give people that information. So looking forward, Nick, I'm going to you with this one. What is a market trend that lenders should be watching over the next kind of 6 months? What's your tip for this?
Crikey. So this, what, with my economist hat on?
Yes.
Well, so aside from the onslaught of AI, which I think everyone is keenly keeping abreast of and trying to understand how they can best use that within their own environments, I think there's probably two. They're quite closely linked. So some UK finance data out there that says that there's about roughly 1.8 million fixed rate mortgages coming to maturity in 2026. So obviously we're over halfway through now, so people have been seeing this in the data for the first half of this year anyway. That's a huge number of customers that will need servicing with product transfers. So looking through the data and understanding, how innovative do they need to be, or how innovative do lenders need to be in their product transfer products. That's certainly one thing. And there could very well be, with that large number of mortgages coming to maturity, there could very well be kind of a shift, certainly with some lenders who've got larger books then, towards customer retention and looking at long-term customer value or lifetime customer value as opposed to new originations. So that's potentially one. And then there's also the affordability changing dynamics, I suppose. So affordability is easing a little bit. Interest rates have eased a little bit from recent highs. However, data is saying that housing transactions are going to be largely flat this year. So it's okay. Do we then take all of that information and shift to looking at lifetime customer value and looking after those customers that we already have? Because the cost of acquisition is going to be quite high, so that could then obviously have an impact on margin. So there's two there, but obviously they're linked by the data and enabling those teams within those lenders making those decisions so that they've got the data to be able to make an informed decision. But then obviously having that robust data there then backs up that decision, so that they can then translate that and articulate it internally.
Anything to add?
No, I don't think so, actually.
Amazing. Thank you so much. I have learned a lot. I think this has been super informative. I'm really glad that the insight has helped you guys so much. It's amazing to hear, and it's great to see kind of a tangible output for something that we've created. So thank you very much. And yeah, we'll see you in the next episode.